Chapter 8. Taxes in the Service Industry. Nobody likes taxes, but if you're in the service industry, understanding them can mean the difference between stress and peace of mind. Taxes aren't just about what you owe the government. They're also about what you can prove. They show the world, banks, landlords, lenders, even future business partners, that your income is real, consistent, and reliable. Think of taxes as part of your financial toolkit. When you know how to handle them, you stop leaving money on the table, avoid unnecessary penalties, and open doors that remain closed to people who don't play the game correctly. The good news? Taxes don't have to be scary. With a few simple habits, you can make tax season just another routine part of your financial journey. Tips and wages. What the IRS expects. First things first, all tips are taxable. That includes cash tips, credit card tips, pooled tips, and tip-outs. The IRS considers every dollar you earn from your job as income, and they expect you to report it. Now, let's be real. In the service industry, not everyone does this. But here's the reality. Underreporting your income can backfire in ways that go way beyond the IRS. If you want to buy a house, qualify for a car loan, or start a business one day, your reported income is what lenders look at. If your taxes show $20,000 a year when you actually make $50,000, you've just cut your own legs out from under you. The smarter move? Track and report your tips. Not only do you stay out of trouble with the IRS, but you also start building the paper trail that proves your income, the foundation of your financial credibility. Action step. Start a daily tip log. Write down cash and credit tips after every shift and total them monthly. Apps, spreadsheets, or even a notebook will do. W-2 income versus 1099 income. Most service industry workers receive a W-2 from their employer at the end of the year. This means your employer has already withheld taxes from your paycheck. Pretty straightforward, but here's where many of us in the industry get tripped up. Side hustles. If you're bartending private events, running a mobile bar, consulting, or doing anything on your own, you're earning 1099 income. This type of income doesn't have taxes taken out automatically, which means the responsibility is on you. If you're not careful, tax season can sneak up and hit you with a bill you weren't ready for. Rule of thumb. Set aside 20 to 25% of every dollar you make from side hustles in a separate account just for taxes. If you don't owe that much in the end, great. You've got extra savings. But if you do owe, you'll be ready. Action step. Open a savings account labeled taxes. Anytime you earn money outside your regular job, immediately move 20% of it into that account. Write-offs and deductions you might be missing. One of the biggest advantages of having side hustle income is the ability to deduct business-related expenses. These deductions lower your taxable income, which means you pay less in taxes. Here are some common deductions for service workers and side hustlers. Work-related gear, non-slip shoes, uniforms, wine keys, pens, cocktail books, certifications. Side hustle expenses, mobile bar setup, mixers, shakers, garnishes, event supplies, business cards. Travel and transportation, mileage for gigs, rideshare trips to private events, parking. Education, books, online courses, classes, workshops, certifications, phone and home office. Partial deduction if you use your phone, laptop, or workspace for booking gigs, marketing, or managing finances. The key is to keep records. If you don't have proof, receipts, bank statements, mileage logs, you can't claim it. Action step. Start keeping receipts in an envelope or digital folder, sorted by month. At the end of the year, hand them to your tax preparer, or use them when filing. Quarterly taxes for side hustlers. If you're earning significant 1099 income, the IRS expects you to pay quarterly estimated taxes. This just means making smaller tax payments throughout the year instead of getting hit with one big bill in April. The deadlines are usually April 15th, June 15th, September 15th, January 15th. Missing these dates can mean extra penalties, so it's better to pay a little as you go. Apps like QuickBooks Self-Employed, Keeper Tax, or even the IRS Direct Pay system make this easier than it sounds. Action step. If your side hustle brings in more than a few $1,000s a year, set a calendar reminder for quarterly tax dates. Pay something, even a small amount, to avoid penalties. Taxes and investing. By now, you may be investing in order to build wealth. But here's the part many people overlook. Every investment move has tax consequences. If you ignore this, you'll end up giving back a big chunk of your gains. If you plan for it, you keep more of what you earn. Stocks and capital gains. When you invest in stocks, options, ETFs, or index funds, the IRS taxes your profits, but not all profits are taxed the same way. Short-term capital gains. If you sell an investment you've held for less than a year, your profit is taxed like regular income, the same rate as your wages and tips. Long-term capital gains. If you hold for more than a year, you qualify for lower tax rates, often 0 to 15% for most people. This is one reason long-term investing often beats chasing quick wins. Not only is it safer, it's also more tax efficient. The bigger picture. Taxes as a wealth tool. Here's the mindset shift. Paying taxes isn't just a burden, it's leverage. Every dollar you report builds your credibility. It proves your income for mortgage approval, car loans with better interest rates, business credit and funding, rental applications. Instead of thinking, I don't want to give the IRS more money, think, I'm showing the world that my income is real. That proof of income is what allows you to move differently. Remember, the goal isn't just to survive another tax season, it's to position yourself for long-term financial growth. Action steps. Track your tips daily and report them consistently. Separate W-2 and 1099 income in your mind. Know which is taxed automatically and which isn't. Open a tax savings account and set aside 20 to 25% of side hustle or investment income. Keep receipts for uniforms, supplies, education, and mileage. Consider filing quarterly if your side hustle grows. File early, not late. Avoid stress and penalties. Closing thought. Taxes are unavoidable, but instead of seeing them as a drain, start seeing them as part of the system you're learning to master. You already know how to hustle. Now it's time to prove that hustle on paper so it can open the doors you deserve to walk through.